Hello and welcome into the KE Report. Chad and Corey here, getting an update from Sierra Madre Gold and Silver. Actually, this is an introduction to the company. Sierra Madre is traded on the TSXV under the ticker SM and on the OTCQX under the ticker SMDRF. And they're a precious metals development and production company. They have purchased the Guitarra Mine from First Majestic, which is a past-producing underground mine. I think it last produced in 2018. We are talking with the CEO, Alex Langer, and you are in the exciting phase of a company, Alex, where you are moving into the ramp up towards commercial production. And Alex, I'd love you to break down how things are going with the ramp up to commercial production, when that's slated for, and just a little color of how this project came together.
Absolutely. Well, first off, thanks a lot, Corey and Chad. Really a pleasure to chat with you guys. Yeah, so Sierra Madre Gold and Silver, we actually started turning on the mills on June 25th. We had a grand opening ceremony. We were running at about 270 tons per day. Towards the end of August, we got up to 300 tons per day, and we announced about 2 weeks ago that we're up to 350 tons per day. So the plan moving forward is to incrementally increase that. We should hit 400 tons per day throughput over the next month or so, and then we will hit commercial production, which is 500 tons per day, before the end of the year. So the mine came together actually a couple of years ago. We were quite fortunate. We were able to acquire it from First Majestic. We ended up paying 35 million US, and that was all in shares. It was a transaction that finally closed in May of 2023, and then we actually turned it on 13 months later. So in June of 2024, so 13 months later, we're about 7 months ahead of schedule, which has been great. It's nice to generate some cash flows. The mine was in amazing shape when we acquired it from First Majestic. So it took a bit of capital to get it up and running. We had to obviously get a mining fleet in place, do a bit more underground development, and then a bit of work on the mill itself. Really just the wear and tear parts, such as, the hoses and, conveyor belts and things like that, a little bit of sandblasting, but really quite fortunate of the great shape that First Majestic had left it in.
So Alex, give us a little bit more background, I guess, on what the asset is currently, where a resource stands, and any sort of forecast you can provide in terms of further production. I don't see any PEA or feasibility, so how can we model this production out?
Yeah, that's a great question, Corey. And so when we acquired the mine, it had about 17 million ounces, all categories, historic resource of silver. We were able to bring that up to 47 million ounces. We did that in November of last year. And then we pushed forward towards production relatively quickly. So we have not completed a pre-economic assessment. We haven't done a feasibility study. In our opinion, it would take, a couple of years and whatever, $2, $3, $4, $5, $10 million to get that completed. For us, my technical team used to actually run and operate the mine in the mid 2000s, and we understand all our costs kind of inside and out. So the mine again shut down in the summer of 2018. So we know our reagent costs, we know our manpower costs, we know our energy costs, we're hooked up to the grid. We have an agreement in place with the union. It's a 6% raise from when it was last in operation. So we really know our costs inside and out, whereas, feasibility study or a bankable feasibility study, you'd be plus or minus, 15%, you'd be lucky. So for us, we know it within a couple points, which is great. Now, historically, the mine produced at 500 tons per day, anywhere between kind of 1 to 1.5 million ounces of silver equivalent on an annual basis. So that's kind of what you would, expect now moving forward. And historically, the mine had a kind of an all-in AISC cost of around $13 US per silver ounce equivalent. That was in 2017 and 18. Now, moving forward, obviously the cost will be higher. Analysts have us anywhere between 17 to 18 US all in per sustaining ounce of silver equivalent. And our goal is to beat that number. So that's kind of what I can talk about, unfortunately, as we don't have a PEA or feasibility study. But when we did acquire the mine, in the summertime, silver was around $18 and we were still happy then. So at today's prices, we're absolutely delighted. We run all our models at about $22 silver and $1,800 gold. So anything above that, and we're very, very happy.
Well, and Alex, we are well above $1,800 gold and $22 silver. So while costs may have come up, so have the metal prices. And so I think a lot of people are looking this as a exciting leveraged play to higher metals prices and production. And I kind of like the idea that you're going into production without the years and years of red tape and trying to get everything into these different studies for marketing purposes. You're just hitting the ground running with a solid mine and mill. Now, let me ask you this. A lot of people are looking at this as a growth-oriented story. And so you think there's the pathway over the next year or two to actually ramp the throughput up beyond the 500 tons per day. Maybe speak to us about what that journey would look like, what kind of CapEx would be needed. How would you move it up in production profile over time?
Yeah, absolutely, Chad. So again, the mine is fully permitted, which is huge. So when we went out to go acquire an asset in a mine, we really wanted something that was fully permitted. It's also underground, which again, for permitting reasons, can be a lot easier. So we had that kind of checked off. So the plan, again, is to get to commercial production by the end of this year, and we're fully funded for that. And what's a commercial production? Theoretically, we have some cash flows. But with the resource being, fairly large, 47 million ounces, and on a good year, the mine is producing 1.5 million ounces a year. That's a lot. That's a long mine life. And so what we do want to do is increase throughput relatively quickly. So we want to walk before we run. So the plan is for 2025 to run at 500 tons per day for the full calendar year, so 12 months. But then after that, we do want to eventually incrementally increase the throughput. We think we can get up to 650 tons per day, then 750, and then eventually up to about 1,000 tons per day if all goes well towards the end of 2027. Now, in order to get there, there's a few things we need to do. Now, the mill itself, actually some of the mill is rated higher than 500 tons per day. So the flotation cells, as well as the filter presses, are actually good for 1,200 tons per day already. So in terms of increasing that, we wouldn't have to do anything. The crushing circuit, which is at the beginning of the operation, is actually rated for about 640 tons per day. So again, it's actually rated higher than the capacity is right now. The biggest bottleneck, as it stands right now, is the ball mills. So we currently have 3 ball mills. 2 of them are running at about 210 tons per day as a capacity, and then the third one is 100 tons per day. So that gives us, above the 500 ton per day number. So what we would like to do is actually add a 4th ball mill. We could add about a 500 ton per day ball mill, which would give us a capacity of around 1,000 tons per day for about $1 million. And that's a brand new one. There's space for it. There's power ready to go. So in actuality, it's not a huge endeavor to be able to do that. We should be able to do it out of cash flows. And then the second bottleneck is going to be the crusher, the crushing circuit. Again, that's rated at 640. We feel we can add another cone crusher for several $100,000. That would get us up to about 750 because the jaw crusher is much larger. And then to get up to 1,000 tons per day, we'd have to add a secondary jaw crusher. So that'd be a very similar circuit to what we have there right now. Actually, we just add a parallel circuit. Initial costs on that would be about $2 million US. Realistically, by the time we're ready, that'll be closer to 3, maybe it's 4 million. But again, not a huge amount of money. So between 3 to 5 million US dollars, we should be able to get the plant and operations up to 1,000 tons per day.
So, Alex, what's the overall play across this project? You mentioned to us off mic that there are 8 former mine sites on this asset. The indicated and inferred resource encompasses a handful of different areas. The inferred resource also covers the tailings. So what's the focus right now, and how do you go about incorporating project-wide all these mines?
Yeah, it's fairly rare to see a junior to have, 8 former mines within its project boundary. Usually you'd have 1 or 2, but to have 8 is pretty significant. And that's one of the reasons why we love La Guitarra, not only the history of her management team, but and the quick to production profile, which we're achieving now. But it's really the exploration potential. We truly feel it is one of the largest undeveloped silver districts in all of Mexico. And the plan is to use those cash flows to go explore the rest of the area. And we started a bit of work on that already. Obviously, there's a lot of historic information we're able to come up with. We spent a lot of times in the old warehouses and municipal offices getting all this information. The whole district has been in production from the 16 to 17 to 1800s, and it was known as the jewel of the Spanish crown in New Spain for a number of years. 2 areas in particular that are really big interest to us are 2 former mines. One is called El Rincon, and the other one is Mina de Agua. Both these mines were significant. You can see the former infrastructure there. It's huge. We're probably had thousands and thousands of employees at the time. But both these mines shut down in the early 1900s. One was in 1910, the other one in 1930. They actually just got a little bit too deep and they flooded. Back then, there obviously wasn't a technology to dewater the mines as there is today. So they just kind of left them. Now, we do have the historic production records at El Rincon, and when that mine shut down, the average grade, head grade, was 6.5 grams gold and 850 grams silver. So really, really significant. And so for us, what we're doing outside the production as it stands right now is we have 3 full-time field geologists. These guys are amazing. They're out in the field every day collecting samples. Last week alone, we collected 700 geological samples, which we're getting processed in our own lab. We have our own lab, which came with the mill and operations, which is great. So our turnaround time is, 20 hours or whatever it is. But we're building up drill targets as we speak. So the plan is to build up these drill targets. We've now identified over 60 kilometers of vein material at surface, whether that's breccia, whether that's vein, whether that's stockwork. We want to start trenching probably early in the new year. And then we want to build up a bunch of drill targets to do a really proper first pass and exploration, which we hope to achieve most likely kind of this time next year. Rainy season starts, June, July in this part of Mexico. Again, we're located about 2.5 hours outside of Mexico City. So a really excellent location. It can be a little bit tricky when you're drilling during the rainy season. So what we're going to do is build up those drill targets and have a really good first pass kind of this time next year.
Well, and Alex, just maybe a big picture question. I think you can see the pathway to production growing and growing over the next year or two. And then obviously as you ramp up the mill, even growing further, you'll need to feed that with more material. So all this exploration, is the idea to do more of a hub and spoke where you would still process it at the current mill? Or how do you envision the big picture for the company as you get into exploration next year and the years thereafter?
Great question. Yeah. So currently right now we're mining just from the La Guitarra mine. So La Guitarra is where the mill is located. So it makes a lot of sense. We do have another quite a big advantage is that we have a material called retaques, and retaques are in essence our waste rock from the former operation when it was in the early 1990s. When the mine was run by Lewisman, they had a head grade cutoff 8 to 10 grams gold equivalent. So really high grades. This material has been pre-blasted and they use it as backfill. So it's just sitting in these stopes, which are, mined out areas. And we've sampled about half of it. We have about 40,000 tons and the average grade is about 350 grams silver equivalent. So really, really high grade material. And we started to mine that as well. And we don't need to blast it. We literally just scoop it out and put it through the mill and combine it with the underground material we are mining. The other really high grade area within the resource is in an area called Colosso. So it's about 4 kilometers away. It's a brand new mine, portal at First Majestic, developed in 2013. It's amazing. There's even Wi-Fi underground, which is incredible. But we're going to turn that area online towards the end of next year. And then we want to move into another former area called Nazareno. Now, Nazareno hosts a historic, non-compliant 17 million ounce silver resource as well. It was meant to be captured using an open pit method, but of course, it'd be very difficult to permit an open pit in Mexico as we speak. So what we would like to do is access that area underground, and we're quite confident we'll be able to do that, and then we'll bring that area on ground. So in essence, we'd have material coming from 3 to 4 sources and using the centralized mill at La Guitarra. Eventually, if all goes well, especially over the eastern district where we have El Rincon and Minera Agua, we would start to bring in some much higher grade material as well. That area itself is again about 4 kilometers away from the current mill. So we'd be looking at a hub and spoke scenario where we could, add the high grade from the Eastern District, combining it with some of the area in Nazareno where we have the bulk tonnage underground mining scenario. And that way we can get up to 1,000 tons per day, maybe even more. I think long term, this mine is probably would settle between 12 to 1,500 tons per day, just with the current resources that we have there. But if we do find what we think we may find in the Eastern District, it could be a good problem where we'd have to look at adding a full secondary mill somewhere closer.
Okay, considering all those growth initiatives, then ramping up the mill past just this initial 500 tons per day through over the next couple of years. I know you're planning on doing that all through cash flow, but any major costs that we should be aware of that you can share with us?
It's all in the few of millions of dollars. What's nice is if we are doing capital improvements, a lot of it can be done using debt, or we could do, prepayments and things like that, especially if we need more equipment. Once you're in production, it opens up many different avenues of capital for you as well. So if it's not out of cash flows, maybe it's money down and then you pay it off over a year or two. A lot of companies are comfortable with that, or if you're just adding a ball mill, things like that. Now we do have one major expenditure, and that's for a new tailings facility, which is being fully permitted. That's about 3 to 3.5 million US that we'd have to outlay for that, but that's a number of years down the road. We currently have space for about 27 months of production in our current facility, and we also recently received a paste backfill permit as well. So that could give us, a number of years of more space underground. In essence, we would, pump up the waste rock after the mill, put it back into the mined out areas. We have over 50 kilometers of underground development and open areas that we could put this material in. So that gives us a couple of years. So really, that's the largest capital expenditure will be the secondary tailings permit, which again is fully permitted, but you'd be looking at about $3.5 million US to get that going. And that's really just the cost of the liners to start before you'd have to move on to phase 2 and phase 3. But that alone would give us, 10 to 12 years of space beyond what we currently have as well.
Well, Alex, I think it'd be a good spot here to have you share your background in the mining industry and then one or two key people from the team just to show their bench strength and knowledge in the sector and that this is not their first rodeo. In fact, you have people working in this mine that are familiar with this mine and have worked in it in the past. Share a little bit about the team behind Sierra Madre Gold and Silver.
Yeah, absolutely. So I'll start with myself. I'm definitely not technical by any means, but I started my career at Canaccord Genuity. I was there in 2003 and left in 2009. But during that time, I got really comfortable with Mexico and actually very comfortable with silver. I was fortunate enough, we were part of the IPOs for both Fortuna Silver and Endeavor Silver. And obviously, those have been amazing successes, both listed on the NYSE. Since I left Canaccord in 2009, I've really kind of structured companies, putting together management teams, raising capital. I was part of a Millennial Lithium, and we sold that for $490 million a couple of years ago to Lithium Americas. I was part of Prime Mining, which has done an amazing job, as well as a number of our team members, including Greg Liller. Now, Greg is our Chief Operating Officer. He's an exploration geologist by training, but he's ran and operated numerous mines, including in Mexico. Now, including La Guitarra for a second time, he's actually had 8 projects turn into mines, which is truly unheard of. He's had some big commercial success with Gammon Gold, which was acquired for $750 million. He retired, actually. It's a good story. So he retired, made a ton of money, and he was just kind of hanging out. He was invited down to visit the La Guitarra complex, and he wasn't going to go, but on a whim, he said, I'll check out the area. He's never been. And he said when he arrived within an hour, he knew he was going to take it on. He saw the potential there, the exploration potential, and the mill and operations that were there. He thinks it's, bigger than El Cubo was. So that's one of the things. So he took on the job. They brought up the milling capacity from 80 tons per day to 500, and they did a bunch of exploration work. He drilled about 111,000 meters during his time there, and then left in 2007. And his words are, a day hadn't gone by since 2007. They hadn't thought about La Guitarra and the potential there, how he could possibly start working there again or get it back. And fortunately for him and the rest of the team, including Luis Saenz, who also worked at La Guitarra previously, and Francisco Correa, who was our general manager. They all have a rich history at the mine. Actually, Luis stayed on until 2009 before he went to run Frisco's operations in Mexico. Frisco is a multinational, multi-billion-dollar conglomerate. So he had about 14 different operations he was in charge of. He left there as well to come join us. So we've been really fortunate. Our team now at site is about 188 people. 187 of them are Mexican nationals, everyone except Greg, which is pretty neat. We have 80 employees, all with stock options, which is great. It's pretty neat when you're able to hand over people options and say, listen, you own part of this mine and this operation. It gives people a bit more ownership, which is pretty special. The rest of the workers are union workers. We're not relying on any contract miners. So it's a really nice team that we've been able to build out there. The local community, there's a town actually within the project boundary. So it's about a 7-minute drive. When the mine shut down, a lot of the workers had to leave to other mines in Mexico where they'd work, 10 days on, 5 days off, or they had to move industries. And a lot of them had to move into construction, which, pays about a third of what mining does. So we have about 80% of the people that used to work there now used to work in the mine, which is a huge ratio and a huge number of people. So it's gone really well. Rich history with the mine, and we've been able to kind of achieve what we said we want to do on a quick basis, and we'll continue to do that moving forward.
Let's talk some other company fundamentals. One being shares outstanding. I'm seeing about 152 million outstanding, fully diluted, 165. There is a key shareholder in here being First Majestic. Take us through that relationship and the allocation of insiders. Any other key shareholders that you want to share with us, please?
Yeah, absolutely. So you got those numbers right, about 153 million shares. And then we have no warrants as well. So any of the deals that I've been part of here recently, we try to limit the warrant coverage. I really believe that, if you want to own the stock, you have to own it. You can't just ride the warrant, which is good. As you mentioned, by far our largest shareholder is First Majestic. So they really love the mine. They really believe in the exploration potential. And it's one of the reasons why when we paid 35 million US, it was all in shares. They didn't want cash. Obviously, they have quite a bit of cash, but they've been amazing shareholders and amazing for us. They've provided support. They've provided people, and most recently, they provided a $5 million US loan, which allowed us to get into final production. We had a bit of a budget shortfall at the time. We went through our plan and what we wanted to achieve, and yeah, they were on board, which was great. So it allowed us to get capital at a much lower cost than it would have been through some other sources. We ended up having about 6 offers for funding it for the last little bit that we needed. But with First Majestic, it was good for them. They got a higher interest rate, and for us, we were able to raise capital without issuing warrants or royalty or equity, especially at the time. So they've been really, really good. They've been very, very helpful, and I think they're pretty happy with what we've achieved so far. Other big shareholders are going to be management and insiders. We're actually at about 24, almost 25%, which is a really big percentage, especially for this stage. I myself have invested about $1.6 million into the company to date. Average cost probably around 40 cents, which is fairly high, especially at this stage. Greg's, I think, the 4th largest shareholder. He's invested close to $1.5 million himself. And then our 2nd largest shareholder is a fund out of Europe called Commodity Capital. They're one of the top performing mining funds over the last several years. They've done a really good job. They do very thorough due diligence. So they've been, big supporters, and they come in on every round of the financing that we've had so far. So that's kind of what the share structure looks like, even though it shows it's quite a bit. If you look at the float, it's maybe 40 to 50 million shares, so not a huge amount. Our volumes have started to pick up, which has been great. So we have a bit more of a focus on marketing now that we're kind of achieving what we wanted to do. So it's now time to go tell the story. And honestly, the price of silver and gold hasn't hurt as well. So we're quite fortunate. I think our timing has been quite good.
Yeah, Alex, it's a good time to be bringing a precious metals mine into production. I guess just wrap us up with the key news catalyst and milestones that you want investors looking out for as we round out this year and head into next year.
Absolutely. So again, we started test mining and processing in June. We've been in continuous operation ever since, increasing the daily throughput, which increases the amount of metal we're mining and theoretically increases revenue. So the plan is to next announce when we're at 400 tons per day. We announced 350 a couple of weeks ago, and we will be at commercial production, which is 500 tons per day by the end of the year. And then at that point, we'll be able to announce quarters and look at the revenues that we're generating. We'll be able to have all-in sustaining costs, all that good stuff moving forward. And then we want to use cash flows, increase throughput through to 2026, 27. And of course, go explore the eastern area, which is honestly the main reason we purchased the mine.
All right. Well, we'll wrap it up there. But Alex, I really appreciate you giving us an overview of Sierra Madre Gold and Silver. And if people listening in want to follow along with the news flow out of Sierra Madre, definitely click on the link below this interview. It takes you right over to the company website, straight to their news section. So you too can follow along with the updates as they're released to the market. And Alex, keep us posted as you have more of those milestones. We'll get you back on for an update, and looking forward to our next conversation.
Absolutely, Corey and Chad. Thank you guys so much for the time. And yeah, looking forward to providing updates over the next couple of months.